So the title of this course is Extreme Weather Events and Risk Management Options for Family Forest, a course that was put together with support from the Mississippi State University Extension Service. Now the topics that will be covered through the various videos of this course are timber insurance, seedling survival and how that relates to drought conditions, species selection and invasive species, that's a concern as well, the decision to continue to manage your forests after extreme weather events such as a tornado or an ice storm, or should you go ahead and cut all the timber on the property and start over? How do we make that decision? How do we go about the salvage of damaged timber? What do you need to know about that? We'll also talk about thinning and how that improves the health of the timber stand as well as the value of future timber products to come. We'll look at alternative forms of management such as uneven aged management, where we have trees in a variety of age classes instead of all of the trees being in one class. And then there are certain provisions with the Internal Revenue Service for timber casualty loss so that you can recover some of your investment in the event that your timber is damaged from some kind of extreme weather event. And then we'll wrap up the course with a discussion about weather and climate trends in Mississippi and what that might mean for forest management as we go forward. But I will start off by discussing risk management and timber insurance and how those two relate towards your management of your timberland. The following image here shows the tornado risk map for the United States, and you can see that Mississippi is right in the center of that high risk area. And then if you look down at our 6 coastal counties, you'll see that they are in the primary risk area for hurricanes. So regardless of where your timberland is in the state of Mississippi, you can see that there's significant risk from either hurricanes and or tornadoes. So it's something we need to be thinking about because the chances of some kind of extreme weather event such as this occurring on your property are very real. This was a recent tornado just a few years ago that went through the cities of Tupelo and Louisville. They were extremely devastating, not only to the cities themselves and residential areas, but also to timberland. These were long track tornadoes that stayed on the ground and caused a significant amount of damage. The Mississippi Forestry Commission estimated that those 2 storms together cost over $14 million in terms of timber damage. So these can be quite costly. And then what do you do once that happens to your property? Are there certain things that you can do now to minimize your risk? And that's what will be the focus of this course. So as an introduction to the concept of risk management for timberland owners, recognize that many of you own your timberland to generate future revenue. So in that sense, timber is really an investment for you. And with any investment, you want it to generate an acceptable rate of return relative to the size of the investment and the risks that that investment may face. And typical risks that we see in forestry investments, we have the typical economic risks such as fluctuating timber prices, liability risk, harvest policy risks. Now ideally all of these types of risks are reflected in your minimum acceptable rate of return. There's a certain minimal rate that you have considered that you want to see in your timberland investment. Now, forestry investments compared to other types of financial market risks are pretty low, such as stocks, bonds, other types of risks. They don't fluctuate as widely as some of these other types of financial investments. And that's one of the things that's attractive about timberland investment. But there are other risks that are unique to forestry as an investment. Certain production risks that for some timberland owners that can be just too risky in their opinion and according to their own risk tolerance. Now, when it comes to managing timber as an investment, we are talking about a very long-term investment horizon. typically exceeding 25 years from the time you plant trees until the point that they are financially mature for final harvest. And there is the potential to lose out on that investment from natural disasters, tornadoes, hurricanes, ice storms, fire, insect, disease, theft. All of these are very real. And just the idea of realizing one of those potential sources of loss can really impair some timberland owners' enjoyment. So what can we do to mitigate that risk? Well, let's discuss this concept of risk management. So for timberland investment risk, what do we mean? We're talking about not meeting our anticipated economic returns from the sale of timber. And extreme weather events are a major source of this kind of risk. So if we think about it in terms of an equation, risk would equal the probability of a certain event occurring times its severity or the magnitude of that event. So, for example, hurricane probability. The closer you are to the coast, the higher that probability. Now, it's certainly uncertain, but it could happen. And then the severity is the other factor. A very devastating tornado, a very devastating hurricane or ice storm, all of those factor into that total risk. So I would encourage you to look at this particular graphic where we have probability of the event on the vertical axis and then the severity or damage on the horizontal axis. And where do you see yourself in that quadrant? In terms of a hurricane, if your timberland is in the northern part of the state, you would probably assume relatively low risk. That's something that you should think about. Where do you see your timberland on this particular graph, and make an assessment of the risk that you face. And the risks change over time. This particular graphic, we're looking at the life of a typical pine plantation. Early on, there's certainly the risk of drought and losing the seedlings we have just planted because their root system hasn't established well enough to survive the drought. Fire is a very serious risk through the early years of a pine plantation, up until first thinning at least. And then early on, all the way to maturity, the potential for an ice storm, a huge factor that can cause significant damage to a stand. And then once the stand becomes commercially viable, say first thinning age on, wind can be a real serious risk and potential for loss. So just another factor to consider. Now, what you will learn through the majority of this course is that good forestry practices, they can either minimize or magnify potential risk factors. So knowing how your forest will respond to certain management practices can really help you. And that'll be the majority of this course. But what I want to focus on for the remainder of this lecture is standing timber insurance. Now that's one option that can help you minimize the loss, minimize that risk, and allow you to enjoy your forest. Now, as a family forest owner, you typically don't have the same kind of risk management options that large-scale timberland ownership has at their disposal, which is basically owning enough timberland that one single tornado is going to be a small impact on their overall ownership. But most family owners don't have that option to diversify risk in this manner. You may own one or two or very few forested properties, so one extreme weather event could really wipe out your investment. So an option that is growing in popularity is the purchase of an insurance policy to cover your standing timber. Now, standing timber insurance, that can help protect you from financial loss that would result from damaged timber resulting from some kind of catastrophic event. Coverage is for the value of the timber that would be caused by certain specific perils such as fire, lightning, windstorm, ice, even theft. And they're available from multiple sources across the southeastern United States. Here are three that operate in Mississippi, and this is not an endorsement of these three, but if you're interested in such a policy, you need to do your research with respective providers and evaluate the services they provide and the cost, and select one that is to your liking. But all these firms that offer these standing timber insurance policies, they're fairly similar. They have a very detailed underwriting process, very detailed information that they're going to require. They want to know the exact value of that timber at the time the policy is written and for how much you want to insure it. And the premiums are going to be determined based upon the insured value of the timber and then where it's located. So, for example, proximity to a coastal area, 40 to 60 miles, that's going to impact the premiums because the insurance company is going to calculate that your risk of damage from a hurricane is much higher. So, to reiterate, the premiums will be based upon the value of the insured timber and then where it's located. And the types of coverage, it can include merchantable timber, that's timber that has value right now that could be harvested, and pre-merchantable timber, timber that is not of commercial value yet. And also there's reforestation insurance that will compensate you to replant your forest if there's some kind of catastrophic loss due to drought or fire, for example. And these claims, they can be subject to deductibles that may be net of any salvage revenue that you're able to gain in the event of some kind of catastrophic loss. And depending on how you own your timber, for example, if you own it as a business, your insurance premiums may be tax deductible, and that can make it more attractive. Now, in terms of obtaining a policy, the type of documentation the insurance company is going to want. They're going to want to see forest management plan that's going to have a timber cruise, which is just an inventory of all the timber on your property, its estimated value and volume, location information. So in that application, it'll ask about acres, how many different stands, different forest types within your property, the type of timber, how old it is, how far away your timberland is to the nearest fire department, distance to the coast, what is the adjacent property being used for. And then the timber will have to have an appraised value, and they'll also want information on past losses and a description of what those may have been. So fairly detailed amount of information that will be necessary. But it can protect you from risk from direct physical loss that would result from wind, flood, ice, lightning, fire, theft, aircraft, explosion. Basically anything you want to have the policy include, you can probably get it in there, but that'll cost. So now the value of that timber at the time the policy is applied for can be estimated by you, the landowner, you working with your forester. Now if there is a damage claim made at some point in the future, then the insurance company is going to want that valuation made by a certified appraiser. And then payment for any damages are going to be based upon the lesser of the insured value or the actual value as determined by a certified appraiser. So the loss valuation then will be based on the market value of the timber at the time of the loss, less any salvage value. And on a side note, in terms of IRS casualty loss provisions, you are expected to make an attempt to salvage the timber after a catastrophic loss. So how is the deductible calculated for standing timber insurance? Well, it's a certain percentage of total timber value per each risk insured, and then there's a minimum deductible amount. For example, 5% of the total value of the stand with a minimum deductible of $500. And those deductibles can vary. Now, annual premiums can range anywhere from 0.5% to 1.5% of the standing timber value. Here's an example. A 100-acre loblolly pine plantation that's a site index 70, base age 25, which means the best trees are 75 feet high at 25 years on this particular property. And the current age of the pine plantation is 30 years. And our initial plan to harvest was at age 30. So we're pretty close to harvest. And according to our most recent timber cruise, there's about 44.7 tons of saw timber, the most valuable product, 31.2 tons of chip and saw, an intermediate product in terms of value, and then 20 tons of pulpwood, which is the lesser value product. And based on those product volumes and the latest timber price report, the stand is valued at $1,778 per acre. Now, premiums for 3 years annually could range anywhere from $8.89 to $26.67 per acre. Now, that's protecting harvest revenue in another 3 years projected at $2,210. So the premiums then would be $889 to $2,667 annually for the 100-acre stand. And again, we're protecting against loss up to $221,000 less the deductible. So what does insurance do to the investment value of your forest? Well, let's say that the rate of return on that previous example of the pine plantation had an estimated rate of return of 8.06. So let's add in 3-year premium payments at 0.5%, and that reduces the rate of return down to 8. And what if the premiums were 1.5%? Well, that would reduce the rate of return down to 7.93 for that particular example. So the take-home message here is that insurance does not reduce the profitability to an unacceptable level. However, and the insurance companies will tell you this, it's not considered feasible over the entire life of a pine plantation, for example. So this is ideally designed to ensure the stand, say, from age 12 to final harvest. And it's something that should be considered, particularly if you're within 3 to 5 years of final harvest, and this is key, when the final harvest revenue is needed. It's dedicated for some kind of future expense. So if it would be an insurmountable loss for some of your future plans, such as funding your retirement or funding a child's college education, you may want to consider standing timber insurance. Now, another type of insurance policy is called reforestation insurance. Now, this is not intended to insure you for the value of the trees or the future timber, but this is something that's applied to newly planted stands, or what we call pre-merchantable stands, and it insures you for the cost of replanting your forest after a catastrophic fire or some kind of natural disaster. And this is a type of coverage that has to be renewed each year. And the coverage can be for as many years as you desire up until the stand reaches a merchantable age and value. Now, the premium is based on multiple factors: past losses, location, how many acres, and what level of coverage. And here's coverage. And here's an example. $125 per acre, an insured amount. We're looking at a premium rate of about $1.20 per acre with a $250 minimum premium. And it could be as high as $250 per acre with a premium rate of $1.50 per acre. And again, another $250 minimum premium. And the deductibles change depending on the volume. So anything less than 2,500 acres, deductible is, say, 5% of loss, or about $500. But for much larger tracts, say over 2,500 acres up to 15,000 acres, we're talking about a deductible of 10% of the loss, or $1,000. So when would the insurer pay you to replant following some kind of catastrophic loss? Well, typically when less than 40% of the trees survive. So for example, you have 500 trees per acre and less than 200 trees per acre survive, at which point that would trigger the policy to provide you with funds to go back and interplant. So, in terms of forest risk management, as we recap, timber insurance is just one option, and in some cases it can be prohibitively expensive if the insurance company deems your timberland to be too risky, and it's something that's not considered to be viable over the entire life of the timber stand, what we call a rotation. And as an alternative, forest management practices can do a lot to help you reduce the risk, and that's going to be the primary focus of this course. So the following topics will help you reduce the risk to your timberland and help you to be well prepared to deal with the after effects should you experience some kind of catastrophic loss. So we'll talk about seedling survival, species selection, the decision to manage or regenerate after an extreme weather event, how do we go about salvaging storm damaged timber, what are the benefits and risks of thinning. As an alternative form of management to diversify the risk, we'll talk about uneven age management, and then we'll also talk about IRS casualty loss provisions that can help you recover some of your investment from future taxes. So extreme weather events, they represent one of the single most costly risks facing family forest owners, and the U.S. South is historically one of the most risk-prone parts of the country. This following graphic here summarizes the number of times over the past 30 years that each state has been affected by a $1 billion extreme weather event. And if you look here, you'll see that the U.S. South has experienced the greatest number of these. So we're probably going to see more. So this is an opportunity for you to be thinking about the future of your forest and what steps you can take now to minimize the impact of one of these types of future losses. And I'd like to direct your attention to a publication that's available at the extension.msstate.edu website. It's publication number P2911, titled Risk Management Options for Family Forests and Timber Insurance. And much of what I've described in this presentation will be in that publication. Thank you very much. I hope you enjoy the course.